What's good, everybody? Welcome to the closing beat. Not sure what's going on there, why we missed the normal intro there, but hope you're having a good day so far. This is our quick stock market show that we do just to give you a quick update on kind of what's happened with the markets for the day. The good, the bad, and the ugly there will help you out with that, of course. And if we help you in some way, maybe you'll consider us here at Jazz Wealth. Why am I so short again? Hey, news studio coming on Monday. So the closing beat will be done from Studio 2J. Been posting some pictures and stuff on Instagram just to kind of share what it looks like. But we'll start there. Also, starting on Monday, we're going to be sharing the charts and stuff from our new package here. This is Inside the Dojo. We offer this to our customers. You can actually see the markets however you like. You can check the S&P, Nasdaq, see everything like I do. I'm going to start using this on Monday as well, but the most important part is the video library. All the classes we've ever done just for customers are in there, and they're always archived for you. And of course, going forward, if you can't make our live classes, they are in there for you as well, so I hope you'll check that out. My only little sales pitch for the day is something that actually just happened. I want you to keep this in mind. People go, why don't I just use a target date fund? Like, what do I need you for? One of the biggest things is efficiency. There have been 6 transactions this year alone, which is a record for us, by the way, that where companies have either merged or been bought by another company. One that just happened was, I'm not going to say the name of the company, but you or your family have used them. Somebody you know has used this service or this company. They were bought by another company. And every time that happens and we get a notice of that, we look to see what's the most profitable way for our customers to participate in this. Meaning, should we just sell the position right away, or should we wait and let the company buy us out of whatever the position may be or whatever their offer is? And we do that. You know, in target date funds, they don't even meet but like once a quarter. They're not making those adjustments to help you. They just have a target in mind. All right, 80-20, stocks and bonds. All right, see you next quarter. And that's it. So squeezing every last penny out of what you have, that's typically reserved for the wealthy. And ask yourself, if target date funds and index funds are so good, why don't the wealthy have them? Why aren't they being sold to them? They're not. They're not offering those products to them. It's because they don't want to work with the smaller customer. You're not worth the time. And by smaller, I mean less than $500,000. That's considered small. What we said was, could we build something where we do the exact same thing that the wealthy get, but do it for everybody else? And that's us here at Jazz Wealth. So that's my sales pitch. That's all I have for you for the day. As far as the markets go, Fed Day. That's all anybody cared about today was the Fed. They left rates unchanged, but under the surface, they said some more stuff. They're going to... Remember quantitative easing? They used to call it QE. Well, now we call it QT, quantitative tightening. And so what they're doing is running off their balance sheet. They basically bumped that up a little bit, said they'll be done by September. One of the things that everybody focused on today was that they're not going to raise rates anymore this year, at least as of now. They could change their mind at any moment, but they said they're not going to raise rates anymore this year. Now, the markets, the Dow, if you want to look at the thing off to your right-hand side there, the Dow was down triple digits already for the day. We had already sold off and just kind of drifted lower. Well, you can kind of see by the S&P there. And as soon as the Fed number came out, see 2 o'clock on that bottom right-hand chart there? That's the Fed release. That's how exciting things get when the Fed speaks. And so the Dow went from a down triple digits to positive on the day and then floated back down triple digits. So a wild trading range for today. Now, 68% of the time, Fed day today in March tends to be positive. We covered those stats yesterday. Today would have been a losing day if you played those odds because it didn't work out. Investors or traders had a 99%, they were guessing there was a 99% chance that they were not going to raise rates. They didn't. They held them steady. And to give you a little bit of stats, if you take each Fed day since 1994, if you take each Fed day and you say, what happened 1 month later if they held rates and didn't change? That's kind of rare. We haven't seen that a lot lately. Well, some of you. So what happens if they don't change rates? What's the performance like for the S&P 500 a month later? Just out of curiosity, it's almost a 1% gain. And that's the best returns you get. So in other words, if we say, what happens 1 month later when they cut rates? What happens 1 month later when they raise rates? What happens 1 month later when they hold rates? When they hold rates, that's the best performing returns you can get if you were to go back and study that. I don't know if that means anything to you. Just something interesting to me. So Anyways, let's move into the markets today. Enough blabbering, Dustin. You did your thing. Let's go. Let's go. Here's the Here's the S&P 500. So we're hovering there near highs, noticing a little bit of weakness there. But like I said yesterday, totally fine. Let the markets pull back a little bit. Not crash. I'm not saying crash. How about a little pullback? Even just a few percent really wouldn't scare anybody. It'd be a few days of people going, oh my God, is this the top? What's going to happen here? But I don't think it'd be a big deal at all if that happened. So the markets did pull back a little. I mentioned the Dow closing lower on the day. That has the very signs of wanting to pull back. Here's a fun technical thing for you. If you like looking at charts, the Dow just gave you the middle finger. Do you know that? That's an actual technical term there. I can't really zoom in good enough for you. Take a look back here to yesterday. See what happened here yesterday? The market started higher, everything was looking good, and then it drifted lower, leaving behind the tail. Anytime there's a sharp rally and then a big topping tail, that's the definition, or that's what they call that one candlestick right there, and then it sells off, doesn't it kind of look like a middle finger? The market's sort of telling you, hey, get out of the way for a minute, let me pull back. That's essentially the Dow. We used to have fun with that. I used to teach kids in like summer camps. We would trade. They would actually trade real money, and I would trade with them and show them, and we use that as an example because what kid doesn't like the rebellious conversation of a middle finger? So we used to say that there. Anyways, that's the Dow. Okay, so Fed news comes out today. Rates. Right? If you're following interest rates, they freaking plummeted. So if we go look at the short term, well, we'll say 10-year. We'll look at the short term here. They broke to new highs on the year. If you're not familiar with how rates work, as rates go down, the price of bonds goes higher. That's why you're seeing the opposite of what it seems like I'm saying there. So shot to new highs on the year. Very, very strong move for that. That's the lowest rate today. I mean, if you're out there buying a house or whatever, today's the lowest rate of the year, at least as of now. If we go to long-term bonds, they did the same, but went back to recent highs. They didn't break to new lows on the year. So right here, just moving back towards the top of this range, a great move as far as a discounted rate there. It hurt the banks a little bit, right? So you're going to see the banks in there. But before I get to that, yield curve. You're going to hear a lot of talk about the yield curve. And actually tomorrow in our class that we're doing, I'm going to cover savings and high interest savings accounts, but I'm going to squeeze in a little bit extra here for our class tomorrow night for customers. If you don't know, every Thursday night we do a class. It's on the events tab. You can actually see it there. If you want to see what we're going to talk about, next week's is going to be really geeky, just FYI. But the yield curve, you're going to hear about this. For those of you that know, I'll explain the details, and then if you're brand new or not very familiar with it, I'll keep it simple. Try to help both of you here. So the yield curve actually flattened to within 10 basis points. Actually, I think it closed down spread was 7 basis points, maybe a touch higher. I didn't check it at the close. So what does that mean? Well, bottom line is that's the first time that it has flattened that much since 2007. You go, uh-oh, I've been hearing about the flattening yield curve, and then they always add recession next to it. That's not actually true. It does happen eventually, but it's not actually true. If you look at every time this happened in the past, where the yield curve was wider than 10 basis points for any stretch of time, let's say in this case it was over 3,000 days that it did it, right? And then all of a sudden it tightens up to under 10 basis points. If you look at every time, the market's actually finished positive every single time 24 months later. And I say 24 months, 2 years, because everybody says the recession starts a year after, within a year or two after the yield curve flattening like that. Not true. So tomorrow in the class, I'm actually show you every single time in history that happened. I'll show you all the data. We'll run through it. We'll just go over all that geeky stuff. But the average gain after the yield curve flattened to the point that it's currently at, after being expanded more than 10 basis points as long as it has been, the average gain over the next 2 years was 24%. The median gain, 26%. So just because the economy is slowing doesn't necessarily mean the markets fall off of a cliff. This time could be different, but, you know, let's take the data. Let's think about it. Always want to be the guy that tells you ahead of time instead of I told you so. I'm going to cover all of that tomorrow, I think, in the class. So just be on alert if you're participating. Might go a little crazy, or maybe I'll just make a separate video. We'll see how I feel. Anyways, back to the stuff that you guys want to be a part of. So financials, they got hit hard today. Break it down. Here's the XLF. This is the large financials. If you're in the dojo, you got large financials in there. We need to add the regionals because they got clobbered. See the regionals there down about 3.5%. You're going to notice this. So the large banks, of course, they're not going to raise rates. You got rates plummeting today. We just explained that. And so with no expectation of the Fed raising rates, then, oh man, isn't that going to hurt the banks' sort of business, right? And yeah, right, they like to borrow long, lend short, make the spread in between the difference, and it's going to be a little bit of pressure, at least as of now. Now, the big banks, the XLF here, this is your Goldman Sachs, JP Morgans, and Bank of America's. I'm excited. I'm like shaking in my seat. I'm so excited. I love talking about this stuff. So the big banks got hurt a little bit, but not as bad as the regional banks. And why is that? Because the big banks are more diversified. You know, when the big banks report their earnings, JP Morgan, Bank of America, things like that, they always say normal earnings, lending earnings is maybe what they focus on. And then they say trading profits. Well, that's because they're participating in that. That's what they do. They also have trading profits for not only their clients, but themselves. Regional banks don't really do that. They just kind of lend money. They offer checking and savings and general investment sort of accounts, and they generate their profit that way. Because of that, they got hurt harder because they don't have the diversity of the trading profits there. That's probably enough on all that. Transport's a little bit lower on the day, about 1.33%. You're going to find that that's largely because of FedEx, so we'll move on to individual stocks today. FedEx was pretty much a big focus to start the morning until the Fed took over. They missed expectations. We talked about this yesterday. Missed on earnings, missed on revenue. The CEO downgraded his outlook for not only the company, but the general economy, global economy. Obviously, if FedEx is flying around the world nonstop delivering packages, they're going to be pretty quick to notice slowdowns. Now, we don't know if it's like the regions that are experiencing the slowdowns, or if it's maybe that UPS has taken over, Amazon's hurting them a little bit here in the US, but most investors looked at that today and said, ooh, if the economy's slowing down, that may not be a good thing. There was actually an analyst that came out today and said this is going to be the lost year for FedEx, meaning if you invested in this stock for this year, you basically just wasted your time. That sort of signifies to me a discounted stock price. When people are telling you run for the hills, don't you kind of feel like checking out what's behind the hill? Maybe that's just me. That's FedEx. Boeing, a little bit higher on the day, did get hurt there towards the end of the day, pulling back. There was an analyst that said, you have to buy Boeing here because the 737 MAX, the whole series, that jet is too big to fail for the industry. Those were his words, not mine. And so he was making a funny reference towards the banks back in the day, the financial crisis. It was deemed that some banks were just too big to let go bankrupt, and the government stepped in to help them. And he's not saying the government's going to step in and help Boeing. He's just saying Boeing and that jet, that series, the 737 MAX, it's too important to the industry to really experience any significant long-term problems. So he was saying dive in there and buy some Boeing. But then after hours and just before the close there, it was reported, Bloomberg posted, or was it Reuters? I want to cite who it was, one of those two, so credit to one of those two. They said that the FBI field office is joining the investigation on how do you get your certifications for this. Tell us about the process of your certifications here. We just want to make sure nothing fishy is going on there. I think that's totally to be expected. General Mills, we've talked about this a couple times here. This was our sort of chart of the day. The other day I was mentioning this here. You got a series of highs, and although they're spread out, traders will notice that. We said you got earnings. If earnings are good, you break out. If earnings are bad, it probably just sat there and wouldn't do anything. But nonetheless, earnings were much better than expected. General Mills, who would have thought? Little old consumer staple, buying your cereal and stuff. They did great. To give you a little perspective there, we were expecting that they would make 69 cents, and they made, looks like 83, getting older, eyes aren't as good. Revenue was also better than expected as well, and they announced guidance going forward. That's sort of the, what do they call it, the triple whammy, if you will, where they say earnings come in better than expected, revenue come in better than expected, and the company's optimistic going forward. So the stock price enjoyed a pretty nice little day there. Micron, earnings are out here after the close. Earnings better than expected, revenue better than expected. Looks like the CEO said still has a challenging market for them. I believe the stock is higher, which this would be interesting. It's up by a little bit, not that big of a deal. Maybe waiting on the conference call there, but the stock price is higher even after, the deal with them, by the way, if you're following Micron or you're participating in this space, the price of memory is just falling off a friggin' cliff. And so these guys are struggling to compete. Well, if Micron can still beat on earnings, still beat on revenue, and analysts are basically saying, hey, by the middle of the year, you should see a bottom in memory prices. What do you think the stock's going to do when memory prices start to stabilize or increase? If the company's already beating expectations on earnings and revenue in a challenging market, the CEO's words, not mine, in a challenging pricing market here, do you think they'll do better or worse when pricing gets better? Yeah, you're making a bet that pricing will get better as analysts expect here by the middle of the year, but you kind of see that in the stock price. Take a look here. You see people already saying, uh-oh, prices are falling in memory chips. Yeah, we get it, oversupply, blah, blah, blah. And then now all of a sudden, wait, you guys are doing better even though things are more challenging? That's sort of interesting. I'm not making any suggestions. I'm just saying if a company is doing well in rougher times, if things get better, would you not expect them to do even better? I don't know. Netflix breaking out of the little range here today. We track all this stuff. Every time I mention something here, we've got this range. I went through a detailed explanation of what this meant. Here to here, from here to here, and to here. What does that mean from a technical standpoint, an emotional standpoint, to kind of prepare your mind for today? So Netflix officially breaking out of the range. Just a good day for Netflix. You don't have to attach any great news to it. Just a great day. Good company, doing well. There we go. You got Alphabet moving higher today. Your big cap tech names all did well. I think Microsoft hit new highs on the day. It did pull back a little bit though. So Microsoft did well to start. Let's give it a little bit of a discount there. Alphabet, they were even fined another 1.9 billion or 1.7 billion. I have a 9 stuck in my head because I believe that the European Union fines have now come to 9 billion, somewhere in there. Who's counting, right? So this could be the end of their fines, by the way, and that's more than likely where you see the stock price rising today. Also, they had a new, they announced a new gaming service. Pretty cool. Cool in the sense that what they're trying to do is be able to create games faster. You got game, they got to be developed, they got to be made and everything. These guys want to sort of develop on the fly and keep you engaged in the game. I can't imagine the undertaking that would be, but hey, Google could do it. Tencent Music, Chinese-based company, recent IPO here. You've probably heard of Tencent. Tencent Music is sort of like Apple Music or iTunes here. First earnings report. So if you're looking on the charts there, brand new, the company is profitable. They do really, really well. First earnings report. They beat earnings, beat expectations, beat revenue. There's concerns about the price that they pay for licensing the music that they do. They've got a little to learn there, but ultimately this is a profitable company. This is a recent IPO that when I wrote about it, I write an IPO article each week. This is one that actually makes money. There are so many companies that go public that either aren't a company, meaning they don't have anything, they just go public for the sake of buying other companies, or they don't make a profit. They're a biotech that's taken a shot on a drug or something, and I give those people a hard time a little bit. Lyft, Lyft going public, things like that. Well, these guys make a profit. Also, I'll wrap it up with Lyft. I'm starting to blend my days together. I don't know if this was yesterday or today. Lyft is in the final stages of going public. Next week, they're going to go public. What they do is they go around to the different investment banks and sort of set up the projector. They huddle all the salespeople in the room. They make their big pitch. If you're in the medical industry, it's very similar to a drug rep coming in and taking a minute with the doctor and a nurse practitioner, everybody, and just trying to pitch your product. Well, that's what they're doing. And it's been wildly successful. They are so oversubscribed is the word to use, just meaning people are so interested in buying or indicating that they will buy. These guys are actually probably going to price higher than you expect. So it sets the stage for Uber to, kind of follow up right behind them, possibly with a little competition. So that's that one. Oh, and lastly, the jean company, oh crap, not Wrangler, Levi. Levi Strauss, they're going to be going public as well. Huge demand for that. Can you think about it? They'll probably, I think it's next week or the week after they'll go public. Huge demand for jeans. Like, we're always talking about like Tencent music and Lyft and disruptive technology and all this excitement. And here comes old jean company, just denim, going public again. They were public a long time ago, about 30 years ago. There's a family that's taking them public this time, essentially to cash out. I should give them a call and see if they need help with their investments. Anyways, so that's all I have for you here today. If you have any questions, I'm happy to answer them. Let me check real quick. Tomorrow, you've got ConAgra Foods going public. Reporting their earnings, not going public. You've got Darden Restaurants, your Texas Roadhouse, things like that, Outback and the others. You got Nike after hours. That'll be the exciting thing to talk about then. The rest is all kind of boring. 28 Jaren says, Dustin would love to see a forum on your website, maybe where we could chat. 100% not. And if you are improvising as a regulator of some kind, I'd like it to be on record that I said no to that. There's a reason why financial advisors don't have certain features. Like, we post the performance of our funds. Do you have any idea what it took to be able to publish that publicly? Huge undertaking. Go look at any other financial advisor's website. You see nothing, no performance. Even the biggest companies out there, nothing, right? If you have a mutual fund, of course, that's a regulated product. Oh my gosh, the regulatory things we had to go through for that. Anyways, can't do a forum. I'm trying. Trust me, I'm doing everything I can to eventually say that if customers are in the dojo, what I showed you at the beginning, should they not be able to chat there? As of now, the answer is no, but I want to see if there's a way to do that. I would love to do that, but there's a couple rules in particular that it's like, well, they're pretty clear. You can't do that, but we're going to try. You can always ask. The SEC can say no. They more than likely will say no, in which case we're out a lot of money, but we have to ask, right? So I would love to. The answer for now is I absolutely cannot, and I would love for it to be on record that I said no. Oh, man. Yeah, the trade war, boy, that's going to be, think about what's going on here. You've got one side, you got China going, hey, we're not willing to talk about all this other nonsense. We're willing to buy some of your stuff and sort of balance out the equation a little bit, but we're not willing to deal with any of the tech issues that you guys have. And you got Trump over here going, yeah, everything's good, man. We're working it out. There'll be something, but if the U.S. keeps pushing more towards all the things that we really want out of China, their whole conquer the world plan and everything, of course China's not going to do that. Would we do that? We would never do that. We wouldn't bow to that. So it could come down to China waiting out the president to see if he gets reelected or not. You want to talk about a trade war that could last a while. That's going to come back up in the news as well. Thanks, Javelian. Happy to be here. Javelian just says, thanks for the time and the effort and everything. I love it. Cool. I love it. Ricardo says, I can't seem to hold a position when I see a good profit. I feel the need to lock it in. Welcome to the markets. I understand that. Now, here's the thing. If it's short-term active trading you're doing, you have to have a plan, right? You put together a plan. I will buy when this happens. I will sell when this happens. Think robotically. You do the best you can. Don't do that in your retirement accounts. A lot of our customers are active traders, and some of them are quite good. But they don't manage their retirement accounts because there is a disconnect between the long, slow, and steady approach and the I'm having fun just generating a little extra money, staying engaged, placing some trades in things that I believe in for the short term. If you can disconnect those two, you'll be good to go there. As far as the emotion of wanting more, you could consider selling in pieces if it's not too costly for you, meaning have two targets in mind. You sell at one spot, you hold on to half the position for the other target, which could be higher. And what you do is you say, on the remaining piece that I'm holding, I will not lose on it. So if you bought at $10, it gets to 15 and you sell half and you say, I'll sell the other half at 20 when we get there, just don't let it go under 10 for the initial half and you'll feel good about it. I mean, that's at least a starting point. Yep. That's one thing you can do anyways. There's a million things you could do, but percent gain. Yeah, actually, that's same thing, Ricardo. So when you hit 6-10% gain, whatever it is you have in mind, the average is 8%. People like to, there's a whole school of thought around 8% gains and taking action then. But when you do that, maybe you just sell a piece of it and say, okay, if it falls back to 0%, I'm going to sell the rest of it. Or you lock in 4% to make another 4%. These can all be fun strategies. When you do that, by the way, Ricardo, track it. Like, you know what I mean? Like, track the stats. If you sell half, wait for half to make another 4 or 5%, and that wasn't successful and it fell back to 0, I want you to track that. If you sell half and you make it to the next target you had in mind, I want you to track that. And then over time, you look and you go, 50% of the time I make it to the target, 50% of the time I break even. That's still more profit than you would have had if you held onto the entire position for the first target. I hope that makes sense. Yeah. You're very welcome, Ricardo. Okay, well, that is all I have for you there. So tomorrow night, our class for customers, we're going to talk about high interest savings accounts, like when to use them, which ones to use, and what goals you have in mind for them. But then I'm going to go into the flattening yield curve thing. I'm about 90% sure. So we'll do that for you. That's the kind of thing I'll do. It may not fit everybody's criteria, but I'll go through it. I'll teach you, so maybe one day you want to come back to it. And if it's not for you now, then maybe it's for you later. Next week, we're going to do a great class on analysts. You know how I say analyst upgraded this, downgraded this? How in the world are you supposed to track all that? And what are all the analysts thinking right now? I'm going to sort of funnel it down, show you every detail about where analysts are, what they expect in individual sectors, individual stocks. What are the best rated stocks right now? What are the best rated sectors? Which sectors will you just absolutely not beat the analysts because they're that good? I'll go through all of that and share that with you next week, of course, in our class for our customers here in the dojo. If you miss it, that's all I got. I'm sorry. A little more marketing today than usual, but I don't know. It's what I do. Have a great day, everybody. We'll talk to you guys later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.